Let's tell you all about CBDC. What is CBDC? The Central Bank Digital Currency, and it's certainly creating a lot of buzz. The Reserve Bank of India released a concept note on the digital rupee. They did this on the 7th of October. In fact, earlier this year, the Government of India had announced the launch of a CBDC in its 2022 Union Budget. Now the RBI has confirmed it is going to be launching a pilot program for the digital rupee, the e-rupee. What exactly is it? Essentially, it's a digital version of the Indian rupee. The Indian Central Bank, the RBI, has proposed two versions actually of the CBDC. One is going to be the wholesale version, another the retail version. Now, the wholesale version is going to be used for interbank settlement, while the public will use the retail version. But frankly, it still doesn't answer that important question whether CBDC is a cryptocurrency or it is not. Well, the underlying technology may be very similar, but the CBDC is going to have some major differences. For one, the e-rupee will be issued and controlled by the RBI. Users will not be able to mine CBDCs like you can mine cryptocurrencies. It will also have one-to-one parity with the rupee. The public will be able to use the retail version through digital tokens. So in a sense, you can find a recipient's public key, something like an email address if you will, and then use the private key or a password to transfer money. The question of anonymity, though, rises again. In a cash transaction, the identity of the purchaser remains anonymous. But with digital tokens being transferred, anonymity goes for a toss again. But the Reserve Bank's concept note has proposed partial anonymity. Through this, small transactions can be completed anonymously, but not the larger ones. Now, the other issue that arises is that of the value of a digital token. Will CBDC pay interest to holders? Well, no. The RBI worries that an interest-paying CBDC might lure people to invest in CBDCs and leave the lenders out. So then, what are the benefits of using a CBDC? Well, for one, it will likely reduce currency costs, it will also lower settlement risk, and it will possibly raise systemic efficiency and enable innovation. But there are risks, and those risks remain. One of the most important questions that arise is that of the impact of a digital rupee on the entire money supply. Will RBI go ahead and reduce the supply of currency notes in the market to increase the adoption of the digital currency, the CBDC, or will it actually raise money supply? And the other important question is that of the product itself. Two versions of the e-rupee. Now that may end up creating confusion, especially when one of them will only have institutional use, and we're talking about the wholesale version. At least as of now, the CBDC remains pretty much a novelty. The challenge for the RBI is to develop it into something that has mass-scale acceptance and it has mass utility too. And for that, we'll have to wait.